Okay, let's unpack this. You've asked us to take a deep dive into something that, well, it touches everyone, everywhere. The economy of China.
Mm-hmm. It's always in the headlines, isn't it? Shaping markets globally.
Exactly. And it evolves in such complex ways. So today, our specific mission is to explore China's current economic state. It's been under a lot of scrutiny and, crucially, to understand how the government is responding.
And some of those responses are quite inventive, maybe even surprising.
Definitely surprising at times. Our main guide for this is a recent piece from The Economist, published August 23rd, 2025. It's called Fresh, but still somewhat feeble.
Right, a very evocative title.
It really is. It gives a great snapshot, loads of data and analysis.
And our goal here really is to pull out the key insights from that article for you, help you sort of cut through the noise, get the nuances of what's actually happening on the ground.
Yeah, and understand what Beijing is doing about it, get to the core, without getting lost in jargon.
Exactly. Give you that informed perspective.
Right, and the article kicks off with this fantastic line, almost theatrical. It says, China's economy has obeyed a three-act dramatic structure recognizable to any playwright.
Ah, I like that. Sets the stage.
Totally. It hooks you right in, and it sets us up nicely to explore these acts, leading into what, Act 3 might actually look like.
Okay, let's do it. Where do we start? Act 1.
Let's start right there. Act 1. The Economist article paints this as a rather feeble autumn. You might expect, after all the talk of recovery, things would be booming.
Yeah, roaring back.
But the picture here is much more subdued. The article's clear. There's some growth, sure, but it's not that robust, full-throttle recovery, more like a slow, maybe cautious reawakening.
Not exactly a sprint.
Not at all. Let's look at some numbers they use to show this feeble state. Sales growth, for instance. In July, compared to a year earlier, adjusted for inflation, only 3.7%.
3.7%. That's okay, but not great. Suggests consumers aren't exactly rushing out to spend big.
Right. It's not driving things with huge momentum. And then there's youth unemployment, that persistent issue.
The 16 to 24 group, outside rural areas.
That's the one. It actually edged up slightly, from 5% to 5.2%.
Ugh, that's tough. Real young people struggling to get started. Big implications down the line.
Absolutely. But here's where, according to the source, it gets particularly telling. Really concerning, perhaps. Yuan loan growth.
Okay. Credit, always key in China.
Exactly. Now, the overall loan books, year on year, they grew 8%. On the surface, that sounds, okay, respectable.
8%.
Yeah.
Seems all right. But there's a but, isn't there?
There is a big but. The monthly net change in these local currency loans, well, it actually dipped into negative territory in July 2025.
Negative. Wow.
Yeah, and the chart in the article hammers this home. It's the first time that's happened in 2 decades.
20 years. Okay, that is significant. Not just a slowdown. That's an actual contraction, month-on-month net change.
It's a real red flag waving, you know?
Absolutely. And what's fascinating and, concerning about that dip, that negative net change, is what it signals about the deeper currents.
Go on.
Well, you might have had some earlier stimulus giving things a little boost, a bit of spare capacity, as the article puts it, but this negative figure, it just screams a lack of robust, self-sustaining recovery.
So less borrowing, less lending, or both?
Likely both. It means net, less new money flowing via loans. It could be businesses, consumers being hesitant, banks getting cautious, probably a mix. But it points to this underlying demand or confidence issue that the usual levers aren't fixing.
Especially for an economy that's relied so heavily on credit expansion for growth historically.
Precisely. This challenges that whole model, doesn't it? Raises big questions about state-led growth and maybe even people's relationship with debt now. Are they just not eager to borrow, even if rates are lower?
Which brings us to the impact on ordinary people. The article drops this pretty provocative quote from Société Générale, something like, "The cost of labor by pleasure, not right of a nation."
Ooh, that's a strong phrase. What do you think they mean by that?
Well, it makes you think, doesn't it? Is it hinting at a future where maybe stable jobs are rarer? More gig economy style work, where it's more about immediate consumer gratification, less about long-term security or traditional labor rights?
A shift away from job security as a given, maybe, towards a more consumption-focused model, even if it leaves workers feeling, well, less secure.
Yeah, potentially eroding some of those fundamental protections, a worrying thought.
Definitely.
So, okay, that's Act 1, this feeble backdrop. The big question then becomes, how's Beijing reacting? What are policymakers doing?
Right. Enter Act 2, the response.
And the article shows they are trying things, lots of new things, actually. We saw earlier efforts, remember? That flagship stimulus policy with trade-ins for old cars, phones,
Yeah,
appliances.
classic consumption stimulus. Get people buying new stuff.
But here's a little wrinkle the source mentions. Local governments apparently aren't always rushing to replenish the funds for those programs.
Interesting. What does that signal?
A bit of a mixed message, maybe? Or perhaps local finances are genuinely strained.
Yeah, if we connect that reluctance, that hesitation from local governments, it could really signal a constraint. Or maybe even a strategic shift away from those traditional methods.
How so?
Well, local governments have usually been huge engines for investment, right? If they're holding back now, it could be real financial pressure.
Right.
Maybe the property market slow down, hitting their revenues.
Makes sense.
Or it could be a recognition that those old top-down methods just aren't giving the bang for the buck they used to. So Beijing has to think differently, more direct maybe, unconventional.
Away from just building more bridges or propping up property prices.
Exactly. It points to needing fresh ideas, a more nuanced approach.
And speaking of fresh, or definitely unconventional, they've unveiled some really intriguing stuff. The article details this Spirit of Aid program, announced by Xinhua, the official news agency, on August 8th.
Spirit of aid. Okay.
And what's fascinating culturally, politically, is how The Economist describes the labeling. They call it dialectically labeled, a nod to Mao's Little Red Book.
Wow, okay. That's layering it on thick historical echoes.
And also called a poor substitute for the phenomenology of spirits. It's not just dry policy, it's wrapped in this unique mix of history and modern pragmatism.
So ideological messaging alongside the economic strategy, calling for collective action, maybe, national solidarity.
Seems like it. Gives it a much deeper resonance than just, fiscal measures.
Right, so what are the actual measures then? The stuff approved with that revised budget on August 8th, designed to boost demand, hit that 5% GDP target.
Okay, let's list them out. They're remarkably diverse, touching almost everything. First, childbirth subsidies.
Tackling the demographic issue head on.
Yep. Over 500 yuan, about 69 US dollars annually, for each of the first 3 children. Direct incentive for bigger families.
Addresses that aging population, declining birth rate problem, long-term economic implications there.
Then, education. Focus on preschool. Free state preschool, starting in the autumn term.
Or an equivalent subsidy for private ones.
Exactly. Eases costs for families, but also it's a strategic investment in human capital, right? Better access to early education.
Boosting future productivity, potentially.
Then for those struggling, unemployed vouchers, up to 800 yuan monthly for care for the unemployed.
Direct income support, cushioning the blow, trying to keep some baseline consumption going.
And here's a really big one, a novel move. The central government is subsidizing consumer credit for the first time ever.
Whoa, okay.
They're taking 1 percentage point off the interest rate for all personal loans.
1% off everything. That's a very direct incentive to borrow and spend. A bold signal. Trying to spark demand where other things haven't worked.
Totally. And beyond those specific things, there are broader subsidies too. Bigger loans available for a whole range of stuff.
Like what?
Old people's care, general education, training, childbirth again, culture, tourism, home furnishings, electronics, even healthcare. It's incredibly comprehensive, granular.
Wow. It really touches almost every part of a household budget and lifestyle. Very different from just building another highway.
It really is.
And this whole package, especially the direct subsidies, the consumer credit help, it really does represent a significant shift in Beijing's thinking, doesn't it?
Seems so. What's the core change?
Well, it's clear the government's getting, as Gu from Gavakal Dragonomics says in the article, more comfortable with income transfers to households.
Right. Less reliance on massive infrastructure, property stimulus, more direct cash or support.
Exactly. Putting money right into people's hands or making key things cheaper, aiming for that immediate, widespread consumption impact.
And Gu also mentioned something about bypassing property tax.
Yeah, that it can outflank the property tax. Maybe getting around resistance to local property taxes. And crucially, it's not just confined to the poor.
So aiming for a broader impact across income levels.
Suggests a wider reach, trying to stimulate demand more directly, more widely, maybe bypassing channels that weren't working efficiently. It really could be a new era for their policymaking.
Recognizing that just building stuff might not be enough anymore for the kind of domestic demand they need.
Precisely. It's a different kind of stimulus.
Okay, so that's Act 2, all these varied new measures. But what's the expected impact? Do they think it'll work?
Well, that's the million yuan question, isn't it? The article cites Goldman Sachs.
Right, what's their take?
They estimate that these small pay and childbirth payments and consumer subsidies will each add less than 0.1% to GDP this year.
Less than 0.1% each. That sounds pretty modest, almost conservative.
It does. But importantly, the article notes other banks have higher estimates, so there's definitely a range of opinions among the experts.
Highlights how tricky it is to forecast the results of these unconventional policies, I guess. Why might Goldman be so cautious? Existing headwinds, maybe?
Could be. Maybe they think the underlying economic drag is just too strong for these measures to make a huge immediate difference. Or maybe it's just hard to predict how people will actually respond to all these different incentives.
True. And it's not like they've completely abandoned the old ways either, right? The article mentions other areas still getting focus.
Indeed. It suggests a multi-pronged strategy. You've got these new direct supports, but also still expect increased infrastructure investment growth.
Ah, so the traditional stuff isn't gone.
Not entirely. The example given is pretty interesting. Continued development of that big railway network, the Continental Free Bosch Railway Network in Xinjiang in Tibet.
Right. Large-scale projects, creating jobs, connectivity, trade, more traditional stimulus.
Exactly. It reflects that long-term strategic vision, too, developing those regions. So it's not a complete rewrite of the playbook, more like an evolution, blending direct aid with foundational state investment.
And then there was that really surprising detail you mentioned earlier, extending even into leisure.
Yeah. It really shows the breadth of this. Even the entertainment sector gets a look in.
Subsidies for novels and movies.
That's what the article says. New consumer subsidies for cultural products like novels and films, and mentions a new movie released August 8th.
Wow. That's incredibly granular. Not just cars and appliances, but books and films, too.
It really captures that idea of stimulating demand across the entire spectrum. Trying to improve quality of life, maybe, not just GDP numbers, a more holistic view.
Fascinating.
And all this, the infrastructure focus, the cultural stuff, alongside the direct aid, it brings us back to something else the article mentions. This idea of bulk character infrastructure and the reliance, ultimately, on state-owned enterprises.
Ah, the SOEs, the big state companies.
Right. While these new direct consumer measures are happening, the underlying belief, or maybe just the reality for China, is that the SOVs are still seen as the ultimate saviors, the drivers of the big stuff.
They have the capacity for those huge projects, like the railway, where private companies might hesitate now.
Exactly, especially if confidence is low or the market seems uncertain. So while Act Two has these innovative direct elements, that reliance on the power of state control, it's still a fundamental pillar. Hints at that ongoing tension between market forces and state direction.
Okay, so let's try and wrap this up. As we look towards a potential Act 3, what's the main takeaway from this deep dive into China's economy right now?
Well, I think it's the sheer complexity, isn't it? And Beijing's really multifaceted response. It's not just one thing.
No, it's this blend. Direct household support, targeted infrastructure investment, even that subtle ideological messaging with the spirit of aid.
We saw an economy showing clear signs of, well, feebleness, especially that really stark dip in monthly loan growth.
That negative number for the first time in 2 decades, that really sticks with you.
It does, and that seems to have prompted this shift, or at least an expansion, away from just relying on the old top-down stimulus playbook.
Yeah, we've definitely unpacked some interesting nuances here, way beyond the simple headlines, a really dynamic, evolving approach to managing the economy.
So what does this all mean for you, listening? We've seen China deploying these innovative methods, sometimes quite unusual ones, haven't we?
Absolutely. From annual payments per child.
To the central government directly subsidizing consumer credit interest rates.
Even boosting spending on novels and movies.
Yeah. All meticulously designed, it seems, to directly nudge demand upwards and hit those growth targets, even with significant headwinds. The scale and the sheer variety of these interventions are really something.
It really is. And that brings us to a final thought, something provocative for you to maybe mull over.
Go for it.
Given these specific, sometimes unconventional and really varied measures, China's taking childbirth subsidies, consumer credit for books, the whole lot, what does this reveal about the future of economic policymaking, perhaps globally?
Could these approaches, especially things like direct income transfers or broad consumer subsidies, start influencing other countries, especially those facing similar issues, like sluggish demand or demographic shifts or just needing to adapt their own economic models.
It certainly feels like we're seeing potential new playbooks for stimulating growth being tested out in real time, doesn't it? Definitely something worth watching very, very closely.